Netflix CFO David Wells stepping down after 14 years at the company, hoping to focus more on philanthropy. What does it mean for the future of the company? Joining us now is Dotan from The Information. Tom, do you have any other context as to why he's stepping down?
I don't really. I mean, it came as a little bit of a surprise to most people who've watched the company. He's been there for over 14 years at the company, many of those as the CFO, and has been pretty successful in that role, just looking at Netflix's stock price over the years that he's been CFO. But there's really no reason to doubt, the official company explanation at this point, which is that, he's been there for 14 years and, looking to do something else, which I guess in this case here is philanthropy.
The company's changing. I mean, it's still not cash generative, but it's getting closer to that point. Is there any chance that the change of CFO has something to do with that the company is crossing a crucial area, coming forth and evolving in its own kind of history?
Yeah, that is the big question, and definitely going to be the thing that the next CFO will have to deal with. David Wells and Netflix as a whole have overseen this tremendous increase in spending over the last couple of years, to a point where this year they could be spending as much as $11 billion on content. But as you saw, at the end of last quarter, when they undershot their subscriber projections and the stock took a hit, you're starting to see a lot more concern from analysts and other investors to whether they can continue to spend at this great level, burning $3 billion this year, and if that's going to be enough to sustain, subscriber growth over the near term.
Right. I mean, that's always been the interesting Netflix model, which is it's sort of hard to justify the valuation. And we're always sort of wondering, Tom, what kind of financial position the company is in with such a big cash burn.
Right. Yeah. I mean, that's the big question. And, they've benefited for the last couple of years in raising tons of debt in order to finance their content strategy. And they began doing this at a time where interest rates were incredibly low. But as we've seen, over the last couple of years, interest rates have gone up. And it's something that the company is taking a lot more notice of now. And again, you can, use debt as a financing instrument for as long as it's cheap. But once it starts getting more expensive, as it is for Netflix, you've got to wonder how much more debt they're going to continue to raise in order to finance all of their programming.
And finally, I just wanted to ask you, Tom, if Netflix faces some sort of turning point or reckoning with what's happening in the competitive landscape. I mean, we've heard them talk about the competition, the AT&T Time Warner deal, the fact that Disney is going to be launching this competing product and taking itself off of the Netflix platform, and how Netflix is dealing with all of that.
Sure, these are major questions for the company right now. And Disney is going to be releasing their product next year. Apple, another company that looks to be spending a ton of money, their actual, final product TBD, but they're certainly poised to be a big player there. And then there's companies like Facebook and Hulu, which is going to be kind of a bigger part of Disney's strategy going forward. So there's a ton of competition for Netflix, no question. I would say that the burden is really on those companies to prove that they can build a subscriber base. Netflix has already proved that they can get, tens of millions of people to subscribe to their service. So the more competitors there are out there, though, Netflix is definitely going to feel the pressure.